Today, let's talk about 3 of the easiest to spot price action entry patterns. These 3 patterns are so easy to find that they actually kind of appear absolutely everywhere. So the more difficult thing to do will actually be finding the right time to utilize them. Feel free to combine what you learn in this video with my other videos about finding bias and targets for pullbacks. After you form a bias, let's say it's bearish, you're going to look for bearish targets for pullback, and then when price finally reaches those targets, you're going to look for these entry triggers to get into a position. First up, and probably easiest to spot, is the engulfing candlestick pattern. The pattern consists of 2 candles. The first generally has an open and close price very close to each other, forming a small candle body. This could even be a doji style candle. The second candle in the pattern has a body that completely overtakes the body of the first candle in the direction of the anticipated trend. Depending on the size of the first candle's body, the required size for the second candle might not be that large. In cases like these, I often want to see the second candle engulf the first candle's wick as well as the body. Examples of engulfing candles are truly everywhere, so be sure to pair the entry with a strong pullback target and bias. For the second entry trigger, we're actually going to switch to Heikin-Ashi candles. To find that, click on the candles button up here by the time frames, and then just drag down to the Heikin-Ashi and click that. Heikin-Ashi candles are formed to give more of a smoothness to price action and don't necessarily reflect the real current price. That's okay though, because we're just here for an entry trigger. Let's use that example we just used for the engulfing candle. As you can see, price retraced into our point of interest before resuming its bearish trend. Since we're bearish because of our higher time frame and lower time frame POIs, we're looking for a bearish candle with no bullish wick as our entry trigger. That candle is right here. Okay, you can see that all of these candles leading up to the pullback have a bullish wick, and this is the first candle without a bullish wick. We're going to go ahead and mark this candle and then go back to the normal Japanese candlesticks to mark our entry. This candle right here is the candle that we marked back on the Heikin-Ashi chart. We're going to go ahead and load up our short position. We're going to place it at the close of this candle. We'll place our stop loss above the point of interest, and we'll target a 1.5 for the take profit. The last pattern I want to go over is morning and evening stars. The morning star is a bullish pattern that appears during pullbacks to signify the end of the pullback. The evening star is just the bearish version. The star patterns are made up of 3 candlesticks, where the first candle moves emphatically away from the trend, the second candle shows little movement or indecision, and the third candle engulfs the second candle. For this entry pattern, you'd be looking to enter at the close of the third candle. You'd place your stop loss on the other side of the star pattern, and then you would target your take profit as normal. Combine any or all of these entries with points of interest for an easy foundation to a trading strategy.